morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about is state of the equity markets, and actually the bull market continues. Now, just taking a step back, let's take a look at after Brexit, S&P broke through the 2120 level, made a new high, pulled back right before our election, another new bounce last week hitting new highs. So until it's proven otherwise, you have to assume this is a bull market. Similarly, we're seeing the Russell 2000 hitting new highs, pulled back a little bit last week. That was one sector that did get hit. We have the Dow Jones Industrials hitting new highs, and also the transportation sector hitting recent highs, not all-time highs, but still moving up very strongly. That was one of the strongest sectors last week. Now, one of the sectors that get hit a little harder was the NASDAQ. NASDAQ Composite actually fell below its 50-day moving average last week. This morning it's bouncing up above that. Some of the tech stocks did get hit pretty hard last week. Now, looking at the sectors, the leading sectors right now are financials, which are very good, the industrials, and also energy is doing very well, and the material sector. So those are the areas you want to be looking at for stocks that you might want to play in this market. Now, since our election, the strongest, to say, industry groups in those sectors have been banks, builders, biotechs had a really good jump that day, and so did small cap tech and semiconductors. Now, this market's a little bit difficult, so here's the way you'd want to play it. A lot of the banks and builders are extended. You don't want to chase that because there will be pullbacks along the way. Now, the semiconductors and the biotech stocks, which did have a very good bounce right after election, pulled back. Now, that's the area you might want to be looking at for some plays, some that pulled back to support level and is bouncing off of that, because those would still give you some good returns. If you chase the banks and the builders right now, they're all a little bit extended, and any normal pullback you might get shaken out or you might hit a stop level. So in summary, it's going to be kind of brief, is you want to keep your eye on those sectors that bounce post-election, because those, anytime you get a new market run, those will be the industry groups and the sectors that will be strongest going forward in this market. So again, banks and builders a little bit extended. On any pullbacks, if you catch a bounce off a support area, that'd be an area to add into it. Right now, the biotechs have been soft. People aren't sure what's going to happen with the Affordable Care Act, so they're kind of getting hit, but there's some good values in there. Same with some of the small cap stocks. So, as always, let price and volume be your guide. Also, here's my disclaimer, none of these are buy recommendations or anything. You always consult your financial advisor. And this is George Kachuk, with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.